So, if you've got money in the stock market, chances are you're feeling pretty great about this whole AI boom. But what if I told you that the ground underneath your feet is maybe a little shakier than it looks? Tonight, we're going to pull back the curtain and break down what's really going on with these AI stocks, and more importantly, what it means for your money. Let's start with a number that might just blow you away: 40%. If you have a 401k or you're invested in a basic S&P 500 fund, a whopping 40% of every dollar you put in goes to just 10 companies. And yeah, you guessed it, most of them are the tech giants at the very heart of the AI craze. That's right. Whether you planned it or not, your retirement money is now basically an AI fund. This incredible concentration means your financial future is now lashed to the fortunes of a tiny handful of companies. NVIDIA, Microsoft, Google, you know the names. You're all in on AI. And that leads us to the big question here. All this hype, all this money pouring in, is it for real? Is it sustainable? Or are we inside something that looks a lot like a bubble? Let's dig in and find out. All right, let's talk numbers, because this is where things get, well, a little wild. The scale of what's happening is just mind-boggling. Just look at that. $330 billion. That's how much money AI tech companies are expected to spend in 2025 alone. We're talking building massive data centers, buying every single GPU they can find. It's an unbelievable mountain of cash. And this right here is the heart of the problem. It's a paradox. To justify today's stock prices, the market is expecting AI to generate $2 trillion in revenue. To put that in perspective, all the biggest tech companies in the world combined don't even make that much right now. The expectation is light years ahead of reality, and that, my friends, is a huge red flag. You know, it says a lot when even the guys running the show, like OpenAI CEO Sam Altman, start dropping hints that this whole thing might get so expensive that they'll need the government to backstop it. When you hear phrases like insurer of last resort, you gotta start asking, is this whole thing really built to last on its own? Okay, so if the actual profits aren't there to justify these insane prices, where in the world is all this money coming from? Well, the answer is kinda complicated. It involves a clever and maybe pretty risky financial machine. The whole thing hinges on this concept: circular financing. Think of it like a game of hot potato with billions of dollars. Big companies invest in each other, which creates the appearance of massive sales and booming demand, even if no new money is really coming into the system from the outside. Let's break down how this money-go-round actually works. Step 1. NVIDIA, whose stock is flying high, plows a few billion into a hot AI startup. Step 2. That startup immediately turns around and spends that exact same money on a massive cloud computing contract with, let's say, Microsoft. Step 3, Microsoft books that as amazing new revenue and then uses it to buy the essential computer chips it needs right back from NVIDIA. And then, Step 4, NVIDIA's sales numbers look incredible, their stock goes up even more, and the whole cycle can start all over again. And honestly, this analogy just nails it. It really is like they're just passing the same $10 bill back and forth. On paper, it looks like everyone is getting incredibly rich and business is booming. But in reality, it can just be the same capital going round and round in a circle. So, I know what you're thinking. This is just some game for tech billionaires. What's it got to do with me? Well, because of how the stock market is set up, this game, it's being played with your money. See, most of our retirement funds are in things like S&P 500 index funds, and you have to understand this next part. These funds are market cap weighted. All that means is that the bigger a company's stock valuation gets, the more of the fund's money it automatically gets. It's not a choice, it's just the way the system works. So let's connect the dots, right back to your 401k. That circular financing pumps up a company's stock price. The higher stock price gives it a bigger market cap. Because it's bigger, its weight in the S&P 500 automatically goes up, which means your passive retirement fund is now forced to buy more of that stock, pumping more of your money right back into the machine. It's a feedback loop that's powered by, well, by us. And what happens when a few companies get this huge, when they become such a massive slice of the entire economy? It creates a too-big-to-fail situation. Sound familiar? Think 2008. If things go south, there's enormous pressure to prevent a collapse, and guess who might be asked to foot the bill? The taxpayer. All right, so given everything we've just talked about, what are the heavy hitters doing? The people who manage billions, who live and breathe this stuff. Forget what they're saying on TV. Let's look at where they're actually putting their money. And this is what's so wild. You've got two legends of the game coming from totally different playbooks, and they're both signaling extreme caution. On one hand, you have Warren Buffett, the ultimate long-term value guy. He's selling stocks and sitting on a record-breaking pile of cash. On the other, you have Michael Burry, the guy from The Big Short, and he's using the vast majority of his fund to actively bet against AI stocks like Nvidia. I mean, their actions are screaming it from the rooftops. They're looking at this market and seeing prices that are just completely disconnected from reality. For them, the potential reward of riding this wave a little higher is nothing compared to the risk of being there when it all comes crashing down. They don't want any part of it. So what's the bottom line here? Look, nobody is saying AI isn't the future. It absolutely is. But we have to remember the dot-com bubble. The internet did change the world, for sure, but not before a whole lot of people lost their shirts on companies that were all hype and no profit. And that leaves us with the trillion-dollar question. Are we witnessing the next great industrial revolution, or are we all just inside a massive bubble waiting for the pop?